If you ever felt like tax season is a punishment for being successful, you need to hear this. The President of the United States, Donald Trump, has recently signed the One Big Beautiful Bill Act, which is basically tax reform that could possibly be a miracle for entrepreneurs like you, or maybe it's a cleverly wrapped trap. We're going to discuss on this episode what that bill really means for you, your business, your family, and your bank account. I am Dakota Grady, the accounting and tax doctor, and I'm prescribing truth today on today's episode. Let's dive in. You probably heard about the tax law signed by President Donald Trump, right? And some people may be scared out of their wits, but I want to make sure that you understand the facts and understand that it's not that scary. In fact, that bill is 870 pages. That's right. I reviewed it. I didn't look at every word, read every word, but I looked at the most important parts of it. And it's a big bill, but we're going to break down what's important to you, what you need to understand, and how it can help you to move forward and not paralyze you in fear. The first one is standard deduction. It's basically a deduction you can take on your tax return, and it has increased for individuals, so singles, to $15,000, $15,750 actually. And if you're married filing jointly, the standard deduction for you is $31,500. All right, and if you had a household, the standard deduction is $23,625. All right, so I'm going to talk about a lot of numbers, so I'm going to run it through this as quick as possible. But the whole point is for you to get an overview of understanding that this tax law bill can help you and not hinder you. And if you feel like it can hinder you, one tip I can encourage you to do, I'm going to leave it at the end, but I'm going to give you a tip that can help you really move forward, help you in your life when it comes to this new tax law change. Because I want you to understand that you cannot control what happens in the White House. You can only control what happens in your house. So you're tired of paying taxes to the IRS every year, and I always feel like you work hard and can't keep your money when it comes to your business? I got you covered. I got a free resource for you. 10 tax secrets that can help you to save money in your business and not pay all your hard-earned income to the IRS. Drop in the chat below taxes, and I'll send you the free resource today. And the law eliminated the personal exemption. It means as an individual, you can't take any personal exemptions for you or your family. But if you're a taxpayer and you're over 65, a senior that is, you can get an additional deduction of $6,000. Now, it phases out at certain income limits of starting at $75,000 for individuals and $150,000 for married filing joint. If you have children, that child tax credit increased from $2,000 to $2,200. So it's additional $200, and you're required to have a Social Security for your child if you want to take the child tax credit. If you have a mortgage and you want mortgage insurance, currently the premium isn't deductible, but the tax law changed that and said that now you're able to deduct not only your mortgage interest, but also the mortgage insurance premium, and that's deductible starting as of 1/1 of next year. State and local taxes, it was capped at 10 grand. So if you had taxes, say, of $12,000, right, and you itemized, you were only able to deduct $10,000. But now the new law says that it's increasing from $10,000, the cap, to now $40,000, and that's from 2025 into 2029, and then starting in 2029, actually ending that year, it's going to revert back to the $10,000 limit. All right, so it gives you about 4 years to really itemize and take a big deduction when it comes to the local and state taxes. If you have a big income and you have set up money and you're actually wealthy, this can help you really. This tax law here with the state and the gift tax exemptions, you can pass to your, say, your family members, your heirs, $15 million without paying taxes. I'll say it again. This tax law gives you the ability to transfer to your people, your family, $15 million without paying taxes on that. All right, that's for the state and gift tax exemptions. All right. The president talked about not taxing tips. Well, he's giving you that through a deduction. So you won't pay taxes on $25,000 of the first tip amount. So if you got tips of $25,000, you won't pay taxes on that. It'll be a deduction for you. So if you pay anything above that, you can say you got $50K in taxes or tips, for example, you're only gonna pay tax on $25,000 because the other $25K will be a deduction for you. All right. Now there are income limits on this as well, so you want to check into that. There's no tax on overtime, but again, that comes in as a deduction. You can deduct $12,500 for overtime. Now, if you're married, it's double that, so you get a $25,000 deduction if you're married found jointly. And again, there are income limits for this as well. Now, this is something that was quite interesting. It said that you got no tax on car loan interest for a personal vehicle. I'm like, really? That's something interesting. I never heard that before, but that would give you, they're getting you a deduction of $10,000 for income limits of $100K, and that's if you're single. And if you're married, found joint, it's double that to $200,000, right? That's the income limit that you can take. This is a particular deduction. Now, if you are taking a tax deduction and you're not itemizing on your tax return, what you can do is you can deduct an additional $1,000, right, if you're single. So you can take a deduction you had the standard deduction, plus you can also take $1,000 if you're giving for charitable contributions, all right? And if you're married found jointly, you can take an deduction of $2,000 for the deduction for charitable contributions if you don't itemize. The clean vehicle credits, which President Biden implemented, have been terminated. So if you wanted to deduct your clean vehicle, if you bought one personally or for business, you can only deduct those through September 30th of this year. Otherwise, you can't use that credit. So make sure if you have not filed your taxes and you bought a clean vehicle, like an EV or electrical vehicle, and make sure you file your taxes before that deadline. Also, one thing I saw notable was Medicaid has been impacted. So Medicaid is basically government assistance for people who make lower income, and also a CHIP program for people who get Medicare, like children and also some adults too. But basically people who are getting government assistance because of their low income. So this new bill has temporarily halted enrollment for this particular program for Medicaid, because basically the president wants to ensure that people aren't getting overpayments and people who are deceased aren't getting payments still, and they always want to make the program more efficient and also want to hold people accountable to increasing their income so they won't have to rely on the government. And that makes perfect sense, y'all. I mean, if people are taking advantage of the system and they know that they are able-bodied to work, let's put them to work. Let's get them off of government systems. You get them to be more efficient, more self-sufficient, and become more productive in America. So we can all win, right? So it makes perfect sense. States are they're going to require people who are low income to work 80 hours, I think, a month, so they can put skin in the game towards increasing their income and again, reducing their reliance on the government. If you are in school and you want to borrow money, I know that the Biden administration, they basically wiped out a lot of student loan debt. Well, President Trump is saying, all right, if you borrow money, you can only borrow up to $200,000 for undergraduate, graduate, and professional degrees. Now, and that's including if your parents co-sign for you too. That way you won't go into a lot of debt. Although I believe that's still a lot of debt, but they're capping that student loan debt to $200K. Now, that's great because I don't want you to go in debt. I want you to stay out of debt. And they're trying to limit your debt amount by capping it so that you won't be stressed out, worried, broke, busted, and disgusted. That's simple, y'all. Now, if you are going to school and you're getting a Pell Grant, say you have a first-year student in college and they're getting Pell Grants, they're going to implement a workforce Pell Grant, which helps with accountability, and they're also going to require that students earn a degree that has earning potential, not just go to school and they can't get a job that pays a decent wage. So that's very important. I think I like that provision right there. Another one is the savings account. It's called a Trump account for children who were born basically in beginning of this year, 2025 through 2029. They'll get, if they're younger than 18, they'll get $1,000, start saving. Basically, get it from the government, right? So which is awesome because they want people to start young for saving for retirement. If you own a business, there are some provisions that were, in my opinion, notable for you to know so that you can take advantage of these tax savings as well. Is you can offer your team members the child care credit, right, from employers. So basically, you can get a credit up to $500,000, right? That's a lot of money. And it depends on how much income you have. So if you have a big business, that's a great way to incentivize your team members to have children to partake in this particular. You can offer the child care to them and you'll get reimbursed basically. You get credit for that. One thing that has gone away is, again, the vehicle credits. Now, if you had a business and you bought a vehicle, say an EV, again, an electrical vehicle, and you were able to get a credit of $7,500, depending on the weight of it, or $40,000. Again, you have until September 30th to make sure that you use that credit and not lose it. And then you also get the depreciation expense. Depreciation, once every down depreciation, depreciation now has been increased limits from $2.5 million to $4 million. So basically, you can depreciate assets up to $2.5 million, right? But they can't exceed $4 million. If they exceed $4 million, that means that whatever the difference is above $4 million, it will reduce the amount you can depreciate. So for example, if you have $4.5 million that you want to depreciate, right? You can only depreciate $1.5, actually $2 million of depreciation because it's being reduced the amount you can depreciate by the overage of $4 million. The last one is the QBI, Qualified Business Income Deduction. The QBI has been permanent tax revision, basically. 20% of your income business income can be deducted, right? But it also made a change where if you make at least $1,000 in income, you get a $400 deduction. So like 40%, y'all. Even if you have a small business, this opportunity for you to save money is here for you. It's available to you. And I saw things online and it didn't make sense to me, so I looked at the tax bill itself. Again, 870 pages. I combed through it, saw the different parts that were stunning to me. Like one part, well, actually two parts stunning to me, is the amount of money they're putting into our armed forces, which is good, but I'm like, man, what are we preparing for? Secondly, they're putting a lot of money into immigration, basically going to build a wall, a border around America to keep people out from coming into our country illegally. That's what they're doing, going to build a wall. And they're putting a substantial amount of money towards building the wall, a detention center, training people, hiring people, and it's just amazing. So I just wanted to bring this to your attention so that you can understand the provisions in this tax law. Let me end with this. Earlier I mentioned about, I'm going to give you some tips, a tip. The tip is, you may be afraid of this bill. Some things may be changing, happening to you. Whether maybe if you're low income, you may lose some of your benefits. May have to require you to work, which is good, but you may not be able to work. But if you're able to work. I want to encourage you, wherever your situation may be, do your best to make more income, because that's how you can improve your life and you can take advantage of these tax law changes, especially if you have a business. Tax law, in my opinion, it really is beneficial for those who own a business because you get deductions on things you can't deduct as a regular individual taxpayer, such as meals, clothing for uniforms, your vehicle expense if you're driving to see clients. So there are things you can deduct that you can't deduct as a regular taxpayer. So I want to encourage you all to start a business, take advantage of these tax law deductions, whether you have one or not. Just start a business anyway. It's beneficial to you. Hope it can add value. Hope it gives some clarity, understand. Please like, share, comment on this particular show. Thank y'all for joining us.